For our double bottom reversal example, we're going to use Pfizer Inc. from the period of September 1999 through June of 2000. You can see that we've got an established downtrend in the stock that allows us to start looking for reversals. In this case, you can see the first point that the stock reverses, which this now becomes our support line. So you take that low and you draw your support line straight across to the right. Okay, you see the stock has its first bounce to the upside, which is right through here, which takes us to the first point of resistance, which is the top of the first reversal, and you're going to draw your line straight across to the right. You'll see the stock bounced, came back up, tested support, but then failed, and came back down in a trending fashion to support, which is the prior low, which you can see right off of your support line. And then you're going to see something. You're going to see this stock reversing, but reversing with good solid volume. And so what you've got now is you've got a new uptrend that we need to start paying attention to for a potential buy point on this stock. And you'll see the stock come down in what appears to be a cup with handle formation right here. Now we can't have a cup with handle formation because we're still in a downtrend, so we would not be looking at this point as our buy point, which is what you would do with a cup with handle. We would be avoiding that. What we'd be looking for is this buy point right here where it comes back up through resistance, and we want to make sure that when it comes through resistance that it does so on significant volume, which in this case it did. So we acquire the stock here. The stock has made a good uptrend. Now we would manage this position by raising our stops and protecting our profits, or at least bringing us back to break even. But if you didn't, you'll see the stock pulled back, and as in most good stocks, the stock did not drop far enough below our original buy point to get stopped out, which we want to look for an 8% stop. So we've ridden it up, we've ridden it down, we've not been stopped out of the stock, and then you'll see the stock gain its momentum to the upside for a profitable trade right through this area. And then you're going to see the stock end up peaking right through here, which is where we're going to want to look to either take profits or watch the stock establish another base and then perhaps add to our position. So this is an example of a double bottom reversal and how we would manage the trade using Pfizer as an example from September 1999 through June of 2000.